Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here with the System Simplified podcast, where we interview top entrepreneurs, founders, and thought leaders about systematizing a business. And this podcast is being brought to you by Business Success Consulting Group. At Business Success Consulting Group, we create custom processes and tailor-made business systems so businesses can thrive and grow. All right, and today's guest is Carla Titus. Hi, Carla.
Hi.
How are you?
Doing great. Thanks for having me.
You are very welcome. I'm so happy to have you. And Carla, you are the owner and the founder of Wealth and Worth Within.
That's correct.
Correctly, that's right.
Yes, you got it.
Thank you. And it is a CFO, which is Chief Financial Officer, but fractional CFO or virtual CFO for you deal with entrepreneurs that are women, right? Women entrepreneurs, and you help them basically be financially solvent and make the right financial decisions.
Correct. We make them money. That's what we're here for. Okay,
I love it. And I'm excited to have you because we're going to talk about financial systems and the systems that you have to have in your company in order to manage your finances correctly. So this is really exciting.
Yeah.
And I think
it's going to be great.
Yeah, totally. And before we start, I want to give a big shout out to Alice Tang, because Alice introduced us years ago and we connected, and we have this professional relationship that we're just growing, and we do, we work we play in the same arena. We have clients that are very similar, and we love helping clients systematize their business. Myself from the operational side, you on the finance stuff, and then it just matches together really well. So
yes,
thank you, Alice.
Thanks to Alice.
That's right.
For that great introduction. And yeah, you're right. The processes in finance are, no different than other processes in your business. Making sure everything is in order and working for you and not taking a ton of time is the ideal state that we want to get all entrepreneurs to, so they can make money easier and faster.
That's right. Absolutely. So first of all, let's start with explaining what is a CFO, because I think that's a question that a lot of people have. You can understand it if you work in corporate, but as an entrepreneur, and even if people don't understand what a CFO is, let's explain that. What is a CFO?
Yeah, a CFO is someone who's in charge of the strategy and the future planning of a business. Small, large, medium, does not matter the size. We can work with all types of businesses, even from the ground up or in startup mode, trying to achieve the next stage of growth. And the critical piece about CFOs that we do best is look into the future and plan for the future. We are operating with information that's current from the data we have and from what's happened in the past to predict what we think the future will be, but also create those action plans to get us there. So it's not just about, fictitious numbers and pie in the sky ideas. It's actually a strategy around how do we do what we do and when do we do it to achieve those financial goals of the company. So we work really tied to the CEO office to make sure that the strategy is understood, that we are in alignment with the direction that they want to go, and then we create plans to feed into how we will achieve those goals. So that's the job of the Chief Financial Officer. It's a little bit different than your accounting team or your bookkeeping team, because that gets confused a lot. So just wanted to clarify, your bookkeeping team is going to be reconciling and categorizing transactions. They might even be providing financial statements, and they might be sometimes advising as well, depending on if they see trends and things and they feel confident giving that advice, they will give you that kind of insight. We rely on that to have at tax time, have your CPA come in and do your taxes and file and tell you what you owe or will get back from the government if you overpaid on your tax planning strategy. And at times you'll have some CPAs that also do some CFO consulting, which is the work that I do. And they might be providing additional advice and support for you to consider as a business owner. If that is not the case and your CPA only files your taxes and tells you how much you need to send in quarterly, that's where you want to bring in a CFO to help you do that future planning and the strategic direction that you want your company to go into so that they can achieve those goals. And so that's how we all three together form your accounting and finance department to help you be more profitable and be able to scale the business quickly and achieve some of the goals and have the clarity to be able to do so.
Beautiful explanation. So we have three people. So it's either three people or three hats, because it can be in a very small business.
One person.
One person can wear all the hats, right? But
Absolutely.
as you grow, you definitely need to separate the hats. And we can also, make the case that you might need all three hats to begin with, but it's different hats that people have to wear. Correct. It's basically the controller or the bookkeeper, which basically are more concerned with the past, what happened, and making sure, like the bookkeeper makes sure that everything, all the money that is coming in and out is accounted for. Correct. Accounts are reconciled, and they also can pay bills, and do some collections of money and invoicing, etc.
Some of them may even do payroll at times. So that's
exactly a payroll
that people have them do.
That's true. So even if you have an external company for payroll, it still falls under the controller bookkeeper hat, right, in that pile. Then you have your CPA, your accountant, your tax advisor that actually looks at the reports from the angle of how you can save the most amount on taxes and how you can minimize your tax liability, so they can strategize on it. So again, they will look at the report. So let's say the controller gives the reports, right? Then the CPA will look at the reports and make sure file your tax return A, and then strategize how to pay the least amount of money. That's the hat of a CPA. And then we have you, who is the CFO, and you're looking at those reports and you're looking into the future, like what is possible, right? I mean, how can we expand? And as you said, work hand in hand with the CEO and the strategy and help create that strategy. So let's say somebody wants to expand their business and they need equipment for that. So you can work with them in terms of like, should we finance the equipment? Should we buy the equipment? How do we finance it? Do you also talk to the bank for them and try to help them in that area?
Yeah, so sometimes banks will require tons of financial statements or reports to be able to approve that type of loan. And so I'll work with the CEO to provide whatever inputs or fill out the form sometimes, right, for them to review alongside and then sign off on it before it goes into the bank. So all of the responsibilities fall here. And something key that you mentioned about making decisions is we are doing the analysis for those decisions before we make the decision. And that is really critical, because that is a distinction between making a bad decision and have to get out of it and spend all the money and time to undo it versus having looked at what are the options, assess, does that make sense? Can we afford it? Yes, now it's the right time. And we do all that analysis to bring it back to get a better decision made. And then it's up to the CEO or whoever is in charge of that department to then take that decision and decide which direction they want to go. But that analysis supports a better decision because the data will support that better decision making.
Absolutely. That makes total sense. I just interviewed, and the podcast was released last week, Cameron Harold, who used to be the COO of 1-800-GOT-JUNK. And he has a great story there about how the CFO was basically warning them that they're going to run out of cash, but they didn't really listen. And then they learned it the hard way. And then they listened. But it's when we talked about it, he really mentioned a good point in terms of the CFO has to have enough of, they have to be part of the leadership team. And if there is something that is important or something that they know that is crucial, they have to make their voice heard, right? Mm-hmm. And not just say, well, this is what I recommend, but it's like, no, this is the way listen, if we don't do it, we're going to run out of cash. We're going to be out of business. We're going to go bankrupt, right? So it's kind of like pushing your idea, basically your analysis or your conclusion along. So what do you think about that? Like in terms of the interaction between the CFO and the CEO?
Yeah. So building that relationship is going to be key to the success of the company. Working with a CFO that, can work with the CEO's mindset and help them understand a different perspective is really important, because at times we're not the most popular person on the leadership team, right? We sometimes are flagging risk. We're trying to mitigate some risk from a financial side. That is not necessarily what everybody else wants to do. They want to do what is fun or make the decision that they think is right for the company. And our job is to stand firm in our ground on what we know that will be the impact financially, prevent and just give warning. Hey, this is something for you to consider. They can overlook it. At the end of the day, they're going to make the decision they make. Like you said, right? We're going to run out of money. It doesn't matter. We're still doing it. It happens a lot. And then there's a lot of, backlash that comes from that, and a lot of pain that you have to endure because sometimes you didn't take into account the financial side that was just as important as the decision you're trying to make. And so that relationship is key to be able to not only bring that perspective, but really stand in your ground as the CFO to say, hey, we don't think financially this is the best decision. It might be the best decision from a marketing perspective, from a, your position CEO perspective, but it might not be financially. So what I like to do is get creative and say, what are the other possibilities? How can we make this decision actually work for us? Rather than saying no, which, by the way, CEOs hate, right? What I like to get into is this brainstorming space where we're like, okay, if we change one aspect of this, can we make it financially viable? If we get some kind of cash flow injection before we go do this thing, then we're well positioned and we don't have to worry about running out of money. Why don't we consider that? Can we get a loan? Can we finance it in some way? Do we want to bring an investor to the table? And those are the type of conversations I like to have with my CEOs. Instead of butting heads with them, what I like to do is say, how can we turn it into a win-win situation where the financial side is considered, as well as the enthusiasm that we have for this new idea or venture we're trying to get into? And again, always before we go make that decision, right? Because once made, we're just dealing with the consequences. And that's a lot harder to deal with than preventing something from going wrong by being creative about the alternatives.
Right. I love it. I love that collaboration and looking at solutions and not necessarily saying no, 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 but also being cautious enough and being that part that says, hey, let's look at all the risks. Let's look what it will take. So you balance. It's a balancing, right? As opposed to just going and spending and chasing the next shiny object or saying yes to every proposal that you are getting. It just makes it a very round leadership team. And,
Absolutely.
You have it in every big corporation. You will have that. You will have the CFO, the CEO, the CMO, the C-suite, right?
Mm-hmm.
But by providing the service that you do, you also make it possible for small to medium-sized business to have the same advice or the same caliber of C-level suite CFO.
Absolutely, yeah.
With the means to actually, because it's fractional, because you're working with smaller businesses, you also understand. So what do you think are the main barriers or challenges that small to medium-sized businesses face in terms of finances?
Cash flow being number one, especially at the start. Many businesses run out of money fast because they're not planning for their expenses. They don't understand the timing on when money comes into the business and when money is leaving the business. And that is such a critical aspect that we should be tracking and managing and taking control of by understanding length of time to earning. Sometimes people have payment terms and they won't pay you right away. We would love to have that happen, but it doesn't happen all the time. And sometimes we have to extend terms to our customers. Sometimes our customers extend, or our suppliers or vendors extend terms to us, right? So it goes both ways. So if you have a net 30, next 60 days, net 90 days, you need to understand the life cycle on how quickly are you going to collect that money and also have a process for it. And that's where a lot of people forget that aspect of business. It's not just about the transaction and getting someone to agree to it, but it's how are you collecting the money? And do you understand what length of time that normally takes? In addition, are you getting extended terms for paying your bills, for getting inventory on hand without having to make that big payment? Maybe it's a 50% upfront, 50% when received, or maybe it's a 90-day extension on terms that allows you to keep the inventory, sell it, make the money, and then pay the supplier that gave you the inventory. And so all those things on when money comes in and when money goes out are going to be key to make sure, one, you don't run out of money, which is the critical one. Two, understanding how you pay yourself, because at the end of the day, the business should be working for you. I see many cases where the first thing to go is the business owner's pay, right? If there's trouble, if there's anything, they're just like forfeiting their own monetary gain from the business. And that is a critical aspect because people are motivated by what they earn sometimes as much as their passion, right? And if the passion is not yielding a salary for you, you might be very demotivated to work harder and longer hours than you normally would, because you're not seeing that reward, right, for your efforts. And so
I mean, some place it will have to end, because, especially if you are, the business is not just for a lifestyle, but it's actually you depend, and your family depends on the business. I mean, you can just go so long until you say, I can't feed my family, I can create
Absolutely.
a future, and that's it. So what do you do with business owners, with entrepreneurs that have that mindset of, well, I come last, I'll pay my employee first, and I'm just going to work in the business for 2-3 years without making a penny, or, or really little.
Yeah, we plan to change that. And so we create a plan where we can afford to have the CEO take home pay that's adequate and at a market rate. Because if you think about businesses' life cycle, over time, what we want to do is be able to replace any single role in the company with an operator, someone that takes over that role and gets paid that salary to be able to function in the company that way. And if there is no salary tied to a job, you will never get yourself replaced. You will never get any of those roles taken, because who wants to work for no money? Exactly. And therefore, by planning, and maybe it takes 3 months before we get there, but what we do is we look at sales, we look at how you're generating money. Can we increase that by 5-10% in the next 3 months? And therefore, there is a carve out for a salary for the owner, right? So we're no longer in the cycle of, well, we're always just going to sacrifice. We look where we can cut back expenses as well, because that's another thing is we spend so much money and we don't really think about the return on investment at times. And if things are just not yielding that benefit of the money you're paying for something, then we want to pull that back and decide, hey, maybe we want to do it differently, smaller. Maybe we want a different provider that costs less. Maybe we want to double down on that, because we also like to spend more money on the things that are working to yield more income for the business. And so it's not always about reducing. Sometimes we can grow, but really planning for it strategically to say, okay, in the next 3 months, we're going to make sure that there's enough money and room in the budget to pay the business owner. Problem solved, right? And obviously, it's not as simple as that. Sometimes it's a lot of things out of our control that we will have to kind of work through. And one thing that businesses just have to stay flexible, and they have to be able to pivot, and they have to kind of roll with the punches, because that's really what business have to deal with. And if it's not one thing, it's another. And having someone that can bring that perspective of business to your company is going to make you feel better, because one, who are you talking about these things with? If you're the CEO, you can't talk to your employees about how you're not going to make payroll in the next 2 months. Mm-mm. You can't talk to your spouse or significant other to say, hey, this is happening, I'm not sure what to do. What's your advice? They're probably going to look the other way and be like, no, thank you. And so who do you turn to, right? Your other CEO friends who are probably telling you everything is great and there's no problems in their company. Well, once you look behind the scenes, that's really different sometimes. And they're telling you.
And even if you have, let's say you go to your CEO friends and you have a support group or mind sharing, but you still want to get the professional advice of somebody that can actually look at your finances and know, right?
Objectively, right?
Objectively, that's right. Mm-hmm. That's right. And, and even if you go to your, to your CEO friends, I mean, they don't necessarily know the working of the in and outs of the business. Different and that can be dangerous because they can advise something that won't work, that maybe work for them, but not necessarily for you. But, I think we need to summarize like what we learned so far, because you gave us so much just in the last, and the answer to the last question, we had so much in it. So first of all, what I learned from it is that we need a strategy. Like, if you as a CEO are not making enough money and not paying yourself, or are not getting out of the business what you want, you need a plan. You need to plan on how to change it. So obviously it's a mind shift as well. Like, you have to have the right mindset that you do need to get paid and probably need to get paid first. So we need to shift that, have this mindset shift, right?
Mm-hmm. Absolutely.
So we adjust that, but we have to have a strategic plan on how to get there. And I like what you said in terms of the strategic plan can be on how to, not necessarily how to reduce expenses, but it's more like evaluating where is the money going, right? You signed up to 105 subscriptions. Do you really need all of them? Well, out of them, like 90 of them you don't use. So we're not saying now you don't spend any money. No, you have to spend money to make money. But out of the 105 subscriptions, maybe we can cancel 90 because you're really not using it. And maybe we can take all that money and invest in that one software that will actually make you money. So it's all about how we can, whatever we invest in, we have to have a return on that. So that's a great advice. The other thing is how to increase sales, period, how to increase the top line, not necessarily stop the bleeding from things that you're not using, but how to also do the top. The strategy, which I love, and having that advice, and really look at it, which I think it's really, if you break down all those areas, it's very important to understand how to do each one and do it. So I think that's amazing advice. Do you have any stories that you can tell us? I always have stories about success where, you start with a business, they were here, and then here's what happened.
Yeah. And obviously, because of confidentiality, I do not disclose my clients' information, but I can speak in general terms of what I see.
Like Jane
and some trends that I've seen happen, right? So Jane is trying to scale from 250,000 to $1 million, and that's a really big leap in 1 year, right? So what we do is we'll start with a plan. First of all, I rely heavily on solid bookkeeping. So if your bookkeeping is not in order and you haven't done that work, you need to hire it out or you need to catch it up, because there's just no way that you can do good financial analysis and strategy without that solid foundation. Next, we're going to start looking at the financial health of the business. We'll start looking at the financial statements with Jane to understand what happened last year and what do we want to do differently this coming year before we even start the year, right? Because we don't want to be in the middle of it trying to plan for something when there's fire drills and things happening at the same time that are distracting the CEO's attention. We want to do that plan a little bit ahead of time so they have the direction and guidance, right? So Jane and I are looking at, what we did in Q1 last year, Q2, Q3, we look at each quarter, we look at what worked, what strategies didn't work, and what we want to do differently scaling from 250 to $1 million, because this is a different size business, right? So just because something worked when you were 250 doesn't mean it's going to work when you're $1 million, or will even get you to $1 million. So what we need to do is just brainstorm and figure out ideas and ways that we can generate new programs, processes, service, or systems that will help Jane go sell more and generate income in different ways. Now, diversification of income is really important. So this one thing that I will work with Jane on is to understand how many different ways do we make money through. And those are called revenue streams. And once we understand our revenue streams, they all might behave differently. And so we're going to forecast and plan for each of those according to what we know today, which is probably not going to be the same as we will know in the future, but we can only work with what we know so far. We might have conversations with other business owners to see if that's worked with them. We'll share some strategies and think, hey, what has worked for my other clients in the past that I can bring to Jane to take into account and have a different perspective. We might pilot some new things, and we'll make some room for that trial and error to happen, because in that, ideas actually get generated and solidified into actual, revenue streams and ways the business can make money. And then we're going to go analyze the expenditures and see what areas do we want to grow to help support that increase in sales. We might want to bring in more marketing people. We might want to bring in more sales. We might want to bring in more bookkeepers for all we know, because, there'll be more transactions to categorize. And so it's not just about, that aspect of the business, but also the operational side, right? We might need an operations manager all of a sudden because she can't do it all. Jane cannot, right? And we might hire her an executive assistant as well at the same time. So those are the things and conversations we're looking at. It's not just financially, but also what kind of team supports $1 million business, and understanding that ties to the expense side of what we want to plan out for. And we're going to be looking at profit margins, and we're going to be looking at, gross profit if there's some kind of inventory cost of goods sold, to understand what we're trying to target. So I like to work backwards. People always say, oh, I made 6 figures in revenue. I'm like, that's great. How much did you keep? Because at the end of the day, that's really what matters. After you pay yourself, what is left in the business to reinvest back to make more money? And half the time, people cannot even answer that question for me. And so we start at the bottom. We say, what do we want to keep and have at the end of the day that we can then pour back into the business to grow the following year? And then we set up a certain profitability target and work backwards from that. Okay, you can only spend this much in expenses to operate and run the business, because otherwise we won't have enough to take home at the end of the day. And so we'll create this plan month by month, quarter by quarter with a set of assumptions. And we are very, very meticulous about documenting those assumptions, because that state of mind you were in when you were planning for the business is not the same when you come back a quarter later and look at your results and see what happens. You need to be able to understand that. For example, we said we're going to sell 100 of those and it's going to be at this price point and we're going to do it in the next 3 months, and you come back and you realize you only sold 80 and it was at a lower price point than you thought, then you can go adjust from that, because now you understand what happened that was different, that didn't let you achieve your goals. Or maybe you surpass them and now you're checking against those assumptions to say, oh man, that was kind of low. We're going to, that up because we know what we're capable of doing next. And so we will update based on that new information. And that's how we can revisit that strategic plan to help Jane achieve that $1 million goal with actionable steps, with a process in place that now her team can take, own, and execute on.
Love it. That's great. That is such a great process. I love it.
Yeah, it's pretty systematized. So
it is very systematized. Absolutely. Yeah. So whomever is listening to us right now, this is the process on how to become financial solvent and achieve your goals. And this is a great opportunity, actually, Carla, to tell the listeners, if they want to reach out to you because they listened to you and they were impressed as I was, like, wow, I want to work with Carla. How do they reach out to you? How do they get a hold of you?
Of course, I would love for them to be in touch with me. You can book some time for us to chat, and we can give you some information about the services we have if we're taking clients at that time. And my website is wealthworthwithin.com. I'm also on Instagram and LinkedIn with that at Wealth Worth Within handle. And you're welcome to also look me up. Carla M. Titus is my LinkedIn profile. And I would love to talk to anyone who wants some more clarity on how to achieve their financial goals and make more money and, grow their business to whatever level they would like to grow at that.
I love it. I love it. And you're definitely the right person for that. So that was very inspiring, a great episode where we actually got specific, I love those episodes when we actually get out of this episode and we have specific things that we can apply, and we can apply that process, understanding the difference between a CFO, a tax accountant, and a bookkeeper or controller. That's very important. So we all have to make sure we have all 3 hats. Even if we don't have 3 people like that, all 3 hats are being worn. Really understanding that in order to make sound financial decisions, you have to have a strategic planning. And having a professional like yourself that can guide through will definitely make a huge difference. So, Carla, thank you so much for being a guest on this podcast.
Thank you for having me. I had such a good time having this conversation with you.
You're very welcome.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.